Ladies and gentlemen, buckle up, because today on Boss Economics World, we're diving headfirst into the chaotic, clown car catastrophe that is the Bank of England's latest policy decision, a decision so riddled with indecision, it's practically a masterclass in economic cowardice. And, as always, we're here to satirize the absurdity, criticize the mismanagement, and expose how the government's bumbling has thrown the UK economy into a ditch deeper than the Mariana Trench. So, grab your popcorn, or your pitchforks, and let's break down this mess, from the surface-level headlines to the ugly economic underbelly, all while shining a spotlight on the real culprits, the policymakers who can't seem to find their own backside with a flashlight and a map. Let's start with the surface-level news, shall we? The Bank of England, led by the ever-cautious Governor Andrew Bailey, has decided to keep interest rates steady at 4.5%. 8 out of 9 members of the Monetary Policy Committee, MPC, voted to sit on their hands, while the lone dissenter, Swati Dhingra, begged for a quarter-point cut. Apparently, the BOE is taking its cues from a deer caught in headlights, frozen, wide-eyed, and utterly clueless about what to do next. Bailey, in his infinite wisdom, warned his colleagues to tread carefully in the face of a turbulent global backdrop. Translation: we have no idea what's going on, so let's just do nothing and hope the problem magically disappears. Now, look, I get it, global uncertainty is a real thing. Donald Trump's tariffs crusade is shaking up markets like a toddler with a snow globe, and the Federal Reserve's own decision to hold rates steady has only added fuel to the fire. But here's the thing, folks, doing nothing isn't a strategy, it's surrender. And while Bailey hides behind buzzwords like fast-moving global events and gradual fall in inflation, the UK economy is screaming for help. Businesses are drowning, households are suffocating under the weight of sky-high energy bills, and inflation is projected to hit 3.75% later this year, nearly double the BOE's sacred 2% target. But hey, why act decisively when you can just wait and see, right? Digging a little deeper, let's talk about the MPC's sudden, hawkish tilt. For the uninitiated, that's economists speak for, we're more worried about inflation than growth, so we're going to keep interest rates high and choke the economy even more. Two of the BOE's most dovish members, Deputy Governor Dave Ramsden and Alan Taylor, did a complete 180, abandoning their previous calls for rate cuts and joining the do-nothing brigade. Even Catherine Mann, who shocked markets in February 2025 by pushing for a half-point cut, has now decided that inaction is the best action. What's driving this flip-flop? Fear of persistent wage growth and firms passing on higher costs to consumers, according to Thomas Pugh at RSM UK. In other words, the BOE is terrified that workers might actually get paid a decent wage, and businesses might dare to protect their profit margins. Heaven forbid. But here's the kicker, folks, while the BOE obsesses over wage growth and inflation, the UK economy is already on life support. GDP growth in Q4 2024 was a pathetic 0.1%, according to the Office for National Statistics, ONS, and business investment has flatlined as firms grapple with higher borrowing costs and geopolitical uncertainty. Meanwhile, household disposable incomes are being squeezed tighter than a tube of toothpaste, with energy bills projected to rise by 10% in 2025, per Ofgem's latest estimates. And let's not forget the labor market, which the BOE claims is resilient because wage growth is holding at a 9-month high. Resilient? Tell that to the 1.4 million unemployed Brits, a figure that's up 6% from last year, per the ONS. Or the 4.3 million households living in fuel poverty, as reported by the End Fuel Poverty Coalition in January 2025. Resilient, my foot. Now, let's get to the heart of the matter, shall we? The real reason the UK economy is in this mess isn't just global turbulence or Trump's tariffs, it's the catastrophic mismanagement by the UK government and the BOE's spineless refusal to hold them accountable. Chancellor Rachel Reeves, in her infinite wisdom, had the gall to say there's still work to do to ease the cost of living ahead of the spring economic statement. No kidding, Rachel. Maybe if you hadn't spent the last year pushing austerity measures, slashing public investment, and cozying up to big corporations while ignoring the plight of ordinary households, we wouldn't be in this mess. Let's look at the data, shall we? Public sector net borrowing hit £143 billion in 2024, according to the ONS, a staggering 18% above the Office for Budget Responsibility's forecast. Why? Because tax revenues are tanking as businesses struggle, and consumer spending is in freefall. Retail sales volumes dropped by 0.7% in February 2025 alone, per the British Retail Consortium, as households tighten their belts. Meanwhile, the government's obsession with fiscal discipline has led to a £22 billion cut in public services, as reported by the Institute for Fiscal Studies in March 2025. Hospitals are crumbling, schools are underfunded, and infrastructure projects are stalled, but hey, at least the City of London is happy, right? And then there's the BOE, which seems to think its sole job is to prop up the pound and keep inflation in check, even if it means strangling the economy in the process. Newsflash, Andrew Bailey, central banks aren't just inflation police, they're supposed to support growth, too. The BOE's own forecasts show inflation hitting 3.75% later this year, but they insist it's temporary. Temporary, huh? Tell that to the millions of Brits who are already choosing between heating their homes and feeding their kids. And let's not forget the BOE's obsession with wage growth, which they see as the big bad wolf of inflation. Here's a radical idea: maybe if the government invested in productivity, say, by reversing the 15% decline in business R&D spending since 2010, per the OECD, wage growth wouldn't be such a problem. But no, it's easier to blame workers than to fix the system. Of course, we can't ignore the global elephant in the room, Donald Trump's tariffs crusade. Since his return to the White House, Trump has slapped a 25% tariff on key imports, threatening to spark a global trade war. The Federal Reserve, in its March 19, 2025, meeting, warned of the inflationary impact of these tariffs, and the BOE is clearly spooked, too. Bailey himself admitted that a trade war could have a substantial impact on the UK, even if the direct effects are ambiguous. But here's the thing, folks, the UK's vulnerability to global shocks isn't just bad luck, it's the result of years of government neglect. Thanks to Brexit, the UK's trade with the EU, its largest trading partner, has plummeted by 16% since 2016, according to the Centre for European Reform. And instead of diversifying its export markets or investing in domestic manufacturing, the government has doubled down on financial services, leaving the economy dangerously exposed to global turbulence. Just look at the numbers: manufacturing output is down 2.3% year-on-year, per the ONS, while the services sector, which accounts for 80% of GDP, is teetering on the edge of stagnation. So, when Trump's tariffs hit global demand, the UK is left holding the bag, with no safety net to speak of. So, what's the solution, you ask? Well, for starters, the BOE needs to grow a spine and cut rates, now. The market is only pricing in 45 basis points of easing by year-end, but given the state of the economy, we need at least 100 basis points of cuts to jumpstart growth. And no, Andrew Bailey, this isn't about calibrating our response or waiting to see what happens, it's about saving the economy from a government-induced coma. Meanwhile, Rachel Reeves and her Treasury cronies need to ditch the austerity playbook and start investing in the real economy. How about a £50 billion green infrastructure fund to create jobs, boost productivity, and tackle climate change? Or a tax break for small businesses, which employ 60% of the UK workforce, per the Federation of Small Businesses. And while we're at it, let's talk about energy prices. Nationalising the energy sector, which has seen profits soar by 73% since 2021, per Energy UK, could save households £1,800 a year, according to a 2025 TUC report. But no, that would make too much sense, wouldn't it? Folks, the UK economy is a mess, and it's not because of Trump, or tariffs, or some mysterious, global turbulence. It's because the people in charge, whether at the BOE or in Westminster, have prioritized optics over action, dogma over pragmatism, and corporate interests over the public good. So, here's my message to Andrew Bailey, Rachel Reeves, and the rest of the economic circus: stop hiding behind excuses, stop paralyzing the economy with indecision, and start acting like you give a damn about the millions of Brits who are suffering. And to you, our viewers, whether you're a concerned citizen or a finance pro, keep holding these clowns accountable. Share this video, join the conversation, and let's demand an economy that works for everyone, not just the suits in the city. Until next time, this is Boss Economics World, where we call out the nonsense and fight for the truth. Peace out.